Welcome to the August Dairy Market Update. At this time of year, we publish our semi-annual outlook for dairy markets, assessing trends in supply and demand to see what we can expect in the year to come. This year, the biggest challenge has been cutting through the uncertainty around how demand may recover as lockdowns ease and the global economy moves towards a recession. Starting with milk production, the timing of the lockdown in Britain meant production on some farms was actively held back through the spring flush, compounding the year-on-year decline we'd already seen. Overall, in the first half of the 2020-21 season, deliveries fell by 1.6% compared to year earlier levels. We expect the impact of these spring cutbacks to continue over the summer months, but with a return to slight year-on-year growth later in the year. For the full season, production is expected to reach 12.44 billion litres, down 0.7% on the previous year. The outlook for demand is slightly more tricky. Without the benefit of precedents for similar situations, we've developed 3 different scenarios for demand recovery. These balance the coronavirus impacts in terms of the lockdown and social distancing with the economic impacts of reduced consumer confidence and lower spending power. The 3 scenarios have been applied to demand across the 4 market channels of retail, eating out, takeaways in the public sector, and across 2 time periods. The base scenario, which is referred to as Scenario A, assumes a moderate slowdown in the economy alongside the gradual reopening of food service markets from July. The normal retail food service balance is assumed to be restored by the end of 2021, but eating out won't fully recover due to some closures. Scenarios B and C are similar, although the restrictions remain in place for longer and the economic downturn is more severe. Scenario C is the most pessimistic case, where the restrictions remain in place for the rest of this year. You can find more information on these scenarios on our website. For dairy overall, consumption in the 18-month period from July 20 to December 21 remains down across all 3 scenarios compared to the 18-month base period of January 19 to June 20. Across all the dairy products, demand is expected to fall by between 0.6 and 2.6 million litres per day. Milk performs quite well, being a stable product present in almost all homes, and in line with the continued reliance on retail for food purchases. Cheese, however, is more dependent on the food service market, and while retail sales have been strong since the lockdown, the rises aren't expected to offset losses from out-of-home consumption across that 18-month period. A similar situation is seen with butter demand, but for yogurt and other fresh products, demand is weakened by the prolonged disruption to public sector and catering demand. Looking at the global situation, forecasts for global milk production are relatively benign, with the growth expected to reach about 0.8% in 2020. Forecasts were downgraded for the remainder of the year due to curtailed production in the US and parts of the EU, including the UK. Most of this expected growth has already occurred in the first half of 2020, although there might be still some second half growth in the US and the Southern Hemisphere. With demand growth in the past few years in the region of 1.5% to 2% per annum, well above the expected increase in supply, stable global dairy prices had been predicted for 2020. That was, of course, before the pandemic hit and demand was cut back by the closure of the hospitality sector. Now, while many of the key importing countries are now starting to reopen, although at different rates, it's unlikely that demand will return to full capacity during 2020. In addition, the slowdown in the global economy will restrict consumer spending, both in and out of the home, and this will limit growth in import demand. The World Trade Organization has forecast a 4% drop in dairy trade this year. All of these pressures will lead to a build-up of inventories and increased competition in export markets. Adding to this, the risks associated with Brexit remain. Increased difficulties in securing export sales, whether due to heightened competition, weaker demand, or greater uncertainty, could put pressure on manufacturers who are active in these markets. In summary, The dairy industry is facing a challenging 12 to 18 months, both from the after effects of the coronavirus on markets and from changes to the global trading environment. A solid understanding of the risks associated with your markets and how those might influence your margin can help to build resilience into your business. Our Dairy Markets Weekly publication will continue to keep you informed about the key factors influencing your markets. You can sign up using our Keep in Touch form.